Hey guys, what's up, how's it going? Robin here, welcome back once again. In today's video, I'm going to be sharing with you guys 3 Canadian dividend stocks that you might want to take a peek at and add inside your stock portfolio. Now, like usual on this channel, we focus on the basics and we focus on the fundamentals. So this is simple stuff that everybody can do, and that's what I like to focus on because that's the kind of investor I am myself. So these 3 stocks, you guys don't have to buy. They're not stocks I'm saying you guys have to, load up on. They're just to give you guys some ideas and just some stocks to kind of look at. So we're going to focus on those 3 stocks in today's video. And like usual, guys, if you guys do enjoy the video, give it a big thumbs up and remember to subscribe to the channel. Now, if you guys watch my channel, you guys probably have a pretty good idea that I like dividend stocks. I like dividend stocks, I like dividend growth stocks, and I like some high yield different investing based ETFs as well. So we're going to cover a wide range of stocks in today's video, but one of the big things I like right now is because now is a good time to buy dividend stocks with the recent dip. The markets are kind of starting to rise up towards the end of this year, but a lot of stocks, a lot of good quality Canadian stocks are still dipped quite a bit. So when the stocks go down, we can get those dividend stocks with some nice high yields. So that's going to be the focus of today's video. And if you guys want to see my 100% stock portfolio, as I'm 100% transparent on this channel, be sure to check out Blossom Social. There will be a link in the description of this video. You guys can download the app on your phone, check out my portfolio, and you guys can see my entire stock portfolio completely for free, 100% transparency on there. Alright guys, so the first stock we're going to be talking about in today's video is going to be Korea Corp. So Korea Corp is an energy-based company and one of the largest midstream oil and gas operators in Canada. The company services oil and gas producers in Western Canada and transports natural gas liquids such as propane, ethane, butane, condensate, and iso-octane to markets throughout all of North America. Korea Corp is currently trading at about $31.34 on the Canadian markets at the time of doing this video, and the current dividend yield is kind of sitting around that 6%, so it's obviously a pretty high yield dividend stock. If you look at some long-term return data for Korea Corp, you can actually see that the company actually is doing pretty well this year, so it isn't a stock that has dipped too much this year. However, if you look at the long-term return of the company, we can see that they dipped quite a bit in the beginning of 2020 with the pandemic. They rose back up, and now they're sitting at a pretty good rate, doing quite well, and again, that high dividend yield is really adding to the total return of the company. And we can also look at the return over the course of time with just the stock growth. So in the past year, the stock has grown by 14.5%. The past 3 years, we have seen a bit of a negative growth, and then in the past 5 years, it is down negative 5%. Once again, the pandemic really influencing this, but if we include the high dividend yield that the stock has and we reinvested it, you can see that the return actually jumps up quite a bit. 1 year return going up 22%, 3 year up 20%, and then 5 year a 25% gain. Again, the pandemic really pushing these numbers down, but that's kind of across the entire market. A cool feature that we now have on Google is we can actually check out the company's financial information here over the past quarter. So the company actually had a pretty good financial statements. We can see different financials from different period of time here on Korea Corp. We can look for September 22nd, which would have been the most recent report, and everything up quite a bit actually. So, a lot of the oil companies are doing quite well, with things going on, but we can see like more recent history, like quarter 1 of 2022, we see earnings beat by 17%. Second quarter, we've seen earnings of 40%, and then the third quarter is a little bit less. But again, a lot of these oil companies obviously are doing well with some things going on in the world, and Korea has actually had some pretty good earnings. So it's always a good sign, always a good thing to look for, especially when you're talking about stocks with high dividend yields. And the last thing I always like to take a peek at is the dividend growth of a company. Now, with a company like Korea Corp that has a high yield, we probably aren't going to look for huge dividend growth, but maybe it's there. So the past 3 years, we can see that the company has increased its dividend growth rate of 4%. So obviously that's a little bit low in the past 3 years. The past 5 years, we can see a dividend growth rate again about 3%. And then the past 10 years, we have a dividend growth rate about 8%. So it's been pretty good of the past 10 years, but we've seen a little bit of a slowdown in terms of dividend growth rate. But, with a company with a high yield, as the yield that it's already is, that's kind of understandable. And again, here's a cool little graph basically showing how the dividends are projected to grow. So they are estimating that there's going to be some big dividend growth coming over the next 10 years. And that's probably because of the increase in financials and earnings that the company has, but nobody really knows. I think, again, history is a good indicator of what's going to happen in the future. And of course, we can see like how that would grow in terms of your yield on cost as well. So once again, 3 year about 4%, 5 year about 3%, and then 10 year about 8%, with some big projections to happen into the next couple years, but we don't really know what's going to happen. At the time of doing this video, guys, I personally don't hold any individual shares of Korea Corp, but I do hold a Vanguard ETF called the VDY, which is the Canadian FTSE High Dividend Yield ETF, and Korea Corp is number 30 on the holdings there. So I do hold it into an ETF. It is part of a lot of the bigger ETFs out there, but I personally don't hold any individual shares of Korea Corp. So if you guys want a good high dividend yield stock, you might want to look at that one. Now, the second stock on this list is going to be one of the more popular stocks that you guys have probably heard of. It's going to be CIBC. Now, I personally am a big fan of TD, and TD is my biggest bank stock that I hold inside my portfolio, but I do believe that all of the Canadian banks are pretty solid, and we're going to do something a little bit different in today's video. We're going to talk about a different bank, and once again, a pretty good solid bank in my opinion, and that's Canadian Bank of Imperial Commerce. So if you guys don't already know, CIBC is currently trading under the ticker CM on the TSX. I'm on here on Google, and we can see here that it's currently trading at about $60 Canadian. Now, the interesting thing about CIBC stock is it's actually down quite a bit. It's down negative 20% year to date. Now, what happened with CIBC, if we look over the past 5 years or so, let's zoom out here to max so we can get a better visual representation. But we can see the stock went down quite a bit with pretty much everything. And with a lot of the other bank stocks, they rose up quite a bit. And then in February, February, March or so of this year, we've seen a pretty big dip. So CIBC, I think, is potentially a good stock to buy. Obviously, it's a good bank stock. All the banks are pretty good. So since it's dipped quite a bit, I think it's in a good position. The current dividend yield is sitting about 5.72%. So that's a pretty high dividend yield. But nonetheless, a lot of these banks are in a good position. Now, when it comes to their earnings and financials, one thing I do want to point out is that the fourth quarter for a lot of the banks, some of the banks have been good, some of them not. If you guys missed my last video, I talked about how TD had a really good quarter four earnings report. Now, CIBC was one of the banks that didn't have as good of a quarter earnings report. We've seen it down negative 20%, and this could be with the interest rates and different things like that affecting that. But CIBC just isn't doing as good in that regard. Now, you could look at this as an opportunity to buy the company if you like the stock. Or I personally am a big fan of TD, but nonetheless, a lot of the banks are good companies. We can see in quarter one they did pretty good. Quarter two they did pretty good. Quarter three they did okay. But once again, I think some of the inflation and some of the different things in the housing market is affecting some of the banks. So once again, you guys are gonna have to do your due diligence to decide which Canadian bank is right for you. Now, since CIBC already has a pretty high dividend growth rate, we're going to take a peek at things like the payout ratio. So the payout ratio for most of the banks are pretty good, honestly. This is why the banks are so great. We can see a payout ratio of about 45%. So even though the company hasn't done great in the last quarter, and even though they have a high dividend yield, kind of around that 6%, they still have a payout ratio of about 45%, which is fairly low. We can look at the 3-year dividend growth rate. We see a growth rate of about 3%. Now, obviously, in 2020, none of the banks increased their dividends, so that kind of pushed it down quite a bit. But I think the 10-year dividend growth rate will give us a better picture, and we can see an 8% dividend growth rate. So again, if we look at that, I think we can expect good things from CIBC in terms of dividend growth. And once again, here's the pretty big projections. Just keep in mind that though that with the housing market and interest rising up, CIBC does seem to have a big exposure to the Canadian market. So this could hurt CIBC a little bit. It's just something you guys want to keep in mind. But once again, it's up to you guys to research and figure out what kind of, what sectors you want to be exposed to with the different Canadian banks. And CIBC is definitely more focused on the Canadian housing market. And here's a pretty comparative graph showing the performance of Canada's big 6 banks over a long period of time. This is kind of a quick little comparison. So you guys can see the different colors here. We have CIBC here, BMO, Bank of Nova Scotia, TD, Royal Bank, and National Bank of Canada here, and we can see that the actual biggest performers here, we're just going to kind of zoom in at the end here and hopefully we can make sense of this. We can see that National Bank is up there, RBC is up there, TD is up there, CIBC, Bank of Montreal, and Bank of Nova Scotia is kind of on the lower end. Nonetheless, I always think as an investor it's important to hold all of the banks to some degree. It's just up to you to kind of decide which ones you want to kind of hold more than others. But we can see here that some of the better performing ones are like TD and RBC and Royal Bank of Canada. So once again, up to you guys to decide, but I just wanted to do a quick little bird's eye view of how the Canadian banks have performed in Canada over the past 20 or 30 years or so. And the final stock we're going to be focusing on in today's video is going to be POW, Power Corporation of Canada. Power Corporation of Canada is a management and holding company that focuses on financial services in North America, Europe, and Asia. Its core holdings are insurance, retirement, wealth management, and investment management, including a portfolio of alternative investment platforms. Some subsidiaries of Power Corporation of Canada that you guys might be familiar with are companies such as Wealthsimple, Great West Lifeco, Power Financial, Mackenzie Investments, as well as some other ones here. So these are pretty popular, pretty common investment platforms that you guys most likely heard of that Power Corporation actually has a big holding in. At the time of doing this video, Power Corporation can be checked out on the TSX with the ticker POW. That's for Power Corporation of Canada. It currently trades at about $34 Canadian at the time of doing this video, and it has a pretty high dividend yield, seen about 5.81%. And the stock has been actually got hit pretty hard this year. It's been down about minus 18%, and the 1-year return is currently down negative 19%. 5-year return is currently up a little bit. It did get hit pretty hard by the pandemic, but it did jump back up. But we've seen it dip back down along with everything else for this year. Now, a lot of the Canadian financial stocks actually had a pretty rough year. 2022 was not kind to a lot of Canadian financial stocks. Some of them done well than others, but obviously with inflation and interest rates and all things kind of making it harder for them to perform well, things are changing. Now, the cool thing about Power Corporation of Canada is they are a pretty big company with a lot of money. Now, if we go over to the quarterly financials, we can see that like 2022 was not a very good year for them. So lots of earnings per shares have gone down quite a bit. But at the end of the day, you got to look at how much money the company is actually making, and we want to look at things like, is the dividend yield covered? What are their earnings? What is their cash flows like? If we take a peek over here, we can actually see that their dividends, even though they've had a rough year, the company still makes a ton of money. Its earnings payout per shareholders, basically its payout ratio is at 63%. So that means that it pays out 63% of its earnings as a dividend. So that's obviously a little bit higher up, but it's not crazy, right? Like even during a bad year like 2022, it's still pretty decent. And their cash payout to shareholders, basically saying how much cash flow they have, it's actually only 18% of their cash flow is paid out to as a dividend. So it's actually pretty safe. So this company has increased its dividends. It's got a bit of a higher yield, but I'd say the dividend is pretty safe, so it's always nice to see. If we take a peek at the long-term dividend growth rate, we can see that the 3-year dividend growth rate is 16%. So they've jacked it up quite a bit because their revenue has increased quite a bit over the past few years. Obviously, this year has gone down a little bit, but nonetheless, they've done pretty well. Past 5 years, 12%, and 10 years around 7%. So the company does have a pretty high dividend yield. That has been increasing it pretty regularly. And once again, if we go back over to Google, and if we head over back to Google and we just take a quick little peek at the company and how it's been doing over the past year or so, we can see that this stock actually might be a good stock to buy right now. If you want to take a little bit of a risk, a lot of people are saying it's a pretty good high quality stock. It's got a good PE ratio. A lot of people are saying like it's a good buy right now. And again, whenever you're buying individual stocks, you got to be careful. But I'd probably say, if you want to put a couple bucks into a good quality Canadian stock that you think has dipped quite a bit, Power Corporation might be a good one to look at. And like usual, guys, because I like to be 100% transparent on this channel, I do have a small holding in POW. Obviously, it's not a lot, and this is something I'm looking to expand upon, but I do hold about $500 here on Wealthsimple Trade. Now, currently, this represents about 2.78% of my personal account, so maybe like less than 1% or so of my overall portfolio. It is something that I'm looking to kind of add more shares into over time, but that's about 15.3 shares, $500 or so, and I'm currently down about 12% inside for POW. And once again, I've been buying the stock over the past year or so. So since the dip, obviously that's going to be, it's going to be a negative holding inside my portfolio. But once again, I am looking to put a couple bucks into the stock over time because I do believe it's basically undervalued right now. Alright guys, that's it for today's video. So hope you guys, like usual, enjoyed the video. Let me know what you guys think in the comment section. These are 3 dividend stocks that I thought were pretty interesting for you guys to take a peek at. Once again, I'm not saying you guys need to buy these stocks. It's up to you guys to do your due diligence, but I just wanted to kind of bring them to your guys' attention. Now, once again, I mentioned earlier, I hold most of these stocks in ETFs. The only stock I actually hold as an individual holding is POW, but nonetheless, I do think these are good quality stocks, and I think other people would say they're pretty conservative, so to speak. So anyways, hope you guys enjoyed the video. Take care. Hope you guys have yourself a good week, and I'll see you guys later.